Thank you for all coming out. I am Seth. I'm on the board here with the CCI. I'm also with BFL Canada Insurance, so I've got first-hand experience working with these two for the past few years. And I'm just going to do a quick introduction. So Omar is a senior business development consultant for Normac Appraisals. Brings over 5 years of insurance appraisal and reconstruction cost experience working with condo corporations, insurance brokers, risk managers, hotels, heritage properties, governmental agencies, as well as others across Canada. Previously, Omar worked for both a condo management firm in Toronto, overseeing large capital projects, as well as an engineering firm working on capital projects. Omar currently successes can be attributed to his determination and focus on ensuring his clients' needs are not only met but exceeded. He takes pride in staying on top of the latest industry trends to ensure his clients' risk management program is being balanced with their insurance program and any gaps are analyzed. Nicole is the business development manager for Western Canada at Normac. Over the past 8 years, she has worked with property managers, strata councils, and insurance brokers to provide accurate and reliable replacement cost reports while upholding Normac's reputation for exceptional customer service. Nicole supports Normac's clients through the appraisal process and handles business development activities in all Canadian and US markets, including large portfolios and unique clients. Nicole holds a degree in communications from SFU, 15 plus years experience in client relations, project management, and marketing. Nicole contributes to the education of the industry as an elected member of BC's PAMA Associates Committee and as a director for CCI BC. Okay, and with that.
Okay. Good afternoon, everyone. Thank you for joining us for today's seminar, Understanding Condominium Insurance Appraisals. We're excited to be here today to share with our knowledge about insurance appraisals with you. And special thanks for CCI for having us in today to speak. As Seth mentioned, my name is Omar Khan. I'm the Normac representative who handles Manitoba. Presenting with me is Nicole Daniels. She is the business development manager for Western Canada. Our objective today is to ensure you have a comprehensive understanding of insurance appraisals and their relevance to condominium corporations, regardless of their size. We're going to do a quick overview of the agenda. Today, we're going to be going over the following topics: an introduction to Normac, insurance appraisal objectives, how we as appraisers determine the value, and we'll conclude with an update on the current construction cost industry trends and provide you with a 2024 outlook. Although we have time at the end of the presentation to do a Q&A, if you have questions throughout, put up your hand on the topic and we can have a chat about it throughout. So if anything you learned today, we want you to know that Normac, we are Canada's insurance appraisal experts. We are a national firm serving all of Canada. Oh. Thank you. We are Canada's leading insurance appraisal experts. Our goal is to exceed client expectations with industry-leading replacement cost reports and rivaled customer service. We take great pride in being Canada's insurance appraisal experts. We specialize in appraisals, or replacement costs as they're also called. They're all we do. By specializing in insurance appraisals, we are able to do what we do best, to provide an unrivaled product and superior customer service and support. Normac proudly stands as a formal provider of insurance appraisals in our industry, consistently leading the way with our expertise, dedication, and excellence. In this time, we have completed more than 100,000 appraisal reports across the country, with a total valuation now exceeding $1 trillion. Normac is celebrating its 25th anniversary this year. Our organizational values focus, innovation, growth, and excellent service and value.
All right, thanks, Omar. So I'm going to go ahead and dive into our first section, and that is insurance appraisal fundamentals. So we're going to lay down a little bit of what to expect when working with an appraisal firm, what you should look for, the scope of the project, and we're going to start right away with what exactly is an insurance appraisal. So an insurance appraisal provides a total estimate of the replacement cost of the property in the event of a total loss. We are completing these pre-loss, and what you're going to do with the total insurable value that we provide is use it to place adequate and sufficient property insurance. So you'll use our values and work with your brokers to determine the property limits each year. And you have to think of this amount as the total amount required to completely demolish and rebuild a property, bringing it up to current standards and codes. Yeah.
Does that include fire damage, like the condo complexes burned down totally? Is that
Absolutely.
Yeah.
So it could be any form of loss, catastrophic loss, but it would be for the total loss. So the TIV, the total insurable value that we use, is what the total amount of insurance is that you are going to be obtaining.
what's the situation that I'm whereby it's possible that the structure of the condo complex is, I guess, detrimental to possibly living there on a continuous basis because of rot and moisture and things of that nature. Now, would that fall under your purview, that nature?
So the question is, if you have a building that there is issues with rot or deterioration, would that play a role within the appraisal value? No, actually. So what we are determining is the total replacement cost new. We're not looking at any depreciation on the property. So whether or not the building is a much older building that perhaps hasn't done any upkeep, we would still be determining the same value as if it was a brand new development, because all of our costing is going to look at what brand new costing would be to rebuild a similar or like property. What you should probably be doing is having an engineering firm come in, doing a building condition assessment, and probably a reserve fund to find out how you should be dealing with those issues. Okay, fantastic. So it is our professional opinion that all property owners, and certainly condominium corporations, obtain a third-party professional appraisal based on an annual basis. And I'm going to go through 4 reasons why that is. So the first reason is very straightforward. At the end of the day, you want to know that you are insuring your corporation adequately, that in the event of a total loss, you're going to have enough insurance coverage to successfully rebuild that property. It is our goal to guarantee that all of the corporations that we work with find the right balance between avoiding over-insurance, but also ensuring that they have enough in the event of a loss and are adequately insured. Another benefit of having an insurance appraisal done is that you can have peace of mind knowing that your premium payments are aligning with the actual insurance needs of the corporation, avoiding potential overpayments. An insurance appraisal assures that you only pay for the insurance that you actually need. The third reason, and a big one, is that with an insurance appraisal, you can actually steer clear of triggering a co-insurance penalty if you do experience a loss. So with a co-insurance clause on your policy, this will determine a certain amount of percentage that you are self-insuring your property for in the event of either a partial or a total loss. Often with an appraisal in place, you can avoid having this type of clause on your policy, ensuring that you are always getting the full reimbursement, hopefully, pending any other issues, but that you're able to avoid this type of clause on your property. If you're unfamiliar with the details of a co-insurance clause, we do recommend that you speak with your broker and see if this is something that you have present on your policy today. And then finally, specific to everybody in this room, having an appraisal in place is going to ensure that you are fulfilling your fiduciary duty of the Condo Corporation to the Manitoba Condominium Act, which mandates that you do have an appraisal completed and that you have insurance for the full value of replacement costs in today's costs. So condo corporations need to be insured to full replacement costs on an annual basis. And I'm going to talk a little bit next about exactly what the Manitoba Condominium Act requires of all corporations. So as I mentioned, the Act requires condominium corporations in Manitoba to obtain insurance that is equal to replacement costs of the property. Of course, the purpose of the insurance appraisal, as we've already gone through, is to determine the full replacement cost of the entire structure, including all of the common elements, landscaping, and the standard units within the condominium corporation. So the relevant section of the Condo Act, section 185 that I have here up on the screen, I'm going to go through this. So 185 part 1 says a condominium corporation must obtain and maintain property insurance on its own behalf and on behalf of all unit owners for damage to the units and common elements that is caused by major perils or any other perils that may be specific in the corporation's declaration or bylaws. Yes. That'll have to be looked at specifically with your broker, but generally, depending on the location where you are, that would be included. Yeah. And anybody from either team here want to correct me on that? Thank you. I know there are some circumstances,
Yes.
if you're living in floodplains and things like that, there may be exceptions where you may want to purchase above and beyond what is included. So to continue on, the insurance required under this section must cover A, the replacement cost of the property damaged by perils to which the insurance applies, and B, any additional costs resulting from zoning and other legal requirements relating to current construction standards, including coverage for the loss of value of any undamaged portions of the property, demolition and debris removal, and any increase in the cost of construction. So something that's interesting about the Condo Act here in Manitoba is that it also specifically dictates that insurance appraisal must be completed at minimum every 5 years. And you can find this in section 185, part 9. Subject to its declaration and bylaws, the condominium corporation must obtain before the first unit is occupied and at least every 5 years after that, an appraisal that meets prescribed requirements for the purpose of calculating the replacement cost under clause. So something that I want to highlight in this section is that it's actually our recommendation and our process that we provide 3-year programs for appraisals. This is an industry standard, and it's in the best interest of the corporations to have a continuous program with annual updates to value, because it is the most effective way to ensure that you are insuring your property adequately, that you are limiting co-insurance for those terms, and to make sure that you are following the Condominium Act section that requires you to have current replacement costs on your property. With a 3-year program, we are able to take into consideration what the increases to cost are year over year. Construction costs do change at a different rate to inflation, and that's something that we're going to talk about in a later part of the presentation. The other thing to consider is if you are accounting for those smaller changes year over year, it makes it much easier for the corporation to plan, budget, and stomach what some of those increases can be. If you're waiting 5 years in between appraisals, you're going to see generally pretty significant jumps in cost that can be difficult to manage. And you're also not having a full review done for any changes that might have come into effect within the building code or any municipal bylaws. So we do recommend that you are having a full report done every 3 years and that you're taking into consideration what those annual increases look like. So I'm going to hand over this next section to Omar.
Thank you, Nicole. From here, I'm going to go through the appraisal process and how the total insurable value is actually determined on our end. So the insurance appraisal objective, excuse me, the insurance appraisal objective, this is the summary of the appraisal process. And any appraisal company will go through the following steps to determine your total insurable value. First, we will have to receive a request from the board, the property management firm, and sometimes even the insurance broker to provide the basic information of the property, the condo number, the number of units, the stories, the construction. Once approved, an inspection will be arranged, An appraiser will collect photographs and information. They'll need to see the entire structure, mechanical rooms, a roof if possible, a standard unit, underground parking, and the full exterior walkthrough. The appraiser will record the construction materials, systems, finishes, and all quality ratings as part of the report. They'll also use condo plans for condominium corporations to determine the square footage of the buildings and a site estimate, an area to estimate the replacement cost of the report. So for condominiums, it's really easy. Almost all condominiums have condo plans registered with the government, so this is usually accessible through the property management firm, or we can even pull them directly from a government source. Sometimes with bare land, it's an issue, so we do have to come back to the boards and see if there's something else available. But generally speaking, it's a pretty straightforward process on that end. Lastly, with all that information, we provide a 3-year program that includes annual updates. This ensures you have adequate coverage on an annual basis, as Nicole mentioned, and there's no lapse in coverage. An important part of any appraisal, of course, is the inspection, as I mentioned earlier. The details that the appraiser are looking for on site are to take photographs and document all items that are included in the total insurable value. This includes the structure, if it's frame, if it's concrete, steel frame, common property, the gym amenities, any party rooms, etc. The mechanical systems, underground water, pools, landscaping. They'll actually go around and count all the trees to make sure that's incorporated correctly, all equipment and standard finishes inside the unit. From there, this is part of our report. It's the construction summary. An appraisal report should include a detailed summary of construction, which lays out all of the components, and as we have described in the last several slides. This is a sample of our construction summary, which includes the construction type, structural components, exterior, interior finishes, mechanical and electrical systems, and landscaping. We've worked on this over the number of years, working with insurance brokers to make sure the information is easily readable and provided to them in a way they can incorporate it to the underwriters. The report should also have a detailed breakdown of the total insurable value. Here's an example of a breakdown you'll see on one of Normac's reports. It's a standard practice to split out different sections of different construction on a report. So a residential portion and a commercial portion, as you can see up here, if applicable, and a parking garage. This will provide the insurance brokers to have the best opportunity to give you a quote, better terms for you as part of their quoting process. And this is because a different frame type in the building will obtain different rates and a different risk profile, such as a wood frame residential apartment versus a concrete frame parking garage or commercial space. So how does the total insurable value from appraisal translate into your insurance policy? Here we have highlighted in red. There's 2 sections in red here. The appraisal value from the sample appraisal report. Again, the total insurable value is defined as a total cost associated with rebuilding the structure. So in one section, we have just a line item of what the total insurable value is. And later off in our reports, we have a total breakdown based on the footprint of the building, the structure, what the landscaping costs are, and what the bylaws and demolition costs are. For the last year, bylaws and demolitions have been an increased importance, and brokers like to see that separately. And from there, you can see the summary of the total insurable value. Yep. David?
What types of things are considered when you talk about standard unit?
So inside of a unit, what's that? Oh, sorry. To repeat the question, David was asking what is considered standard unit. So it's essentially what you receive as a condo owner from the developer before any betterments that you've paid for or the developer has installed or you've made independently. So what does a standard unit in your building look like? If you're in a townhouse development, everybody's finished the basements, that is not the condominium's responsibility. That's excluded. If you've gone in and changed out all your bathrooms, all your kitchens, that is not included. So the appraiser on site will always ask questions. What's a betterment? What's a standard? Just to get back to what the developer standards are, because that is what the corporation is generally responsible for.
Your declaration should also outline what your standard unit is.
Yeah.
And if it doesn't you need to update it.
Yeah, we find the majority that we see don't include it. I don't know if you're in the same
So,
place.
in the event of a claim, what's gonna happen is the insurance company that does the condo is gonna be looking for the definition of the standard unit. So they can figure out what part of the claim they attribute to the unit owner's insurance for an improvement and betterment, and what part goes to the condo.
Yep.
And I can tell you that it makes a big difference in a good sized claim.
I'm going back a couple slides. So we do put a basic standard finishes on the interior of our reports. So you can see the interior finish. And this one is pretty basic, but there's photographs as well that we have on file if there ever are questions. But it does highlight the basics of an interior finish. And then we also ask a lot of questions. But we've noticed a lot of declarations don't have this included. Yeah, the newer buildings do. Older ones still haven't been updated. So it's kind of a mix.
What classify it over? We're at 94.
I would consider that older. So really 2005, 2008, that's kind of,
Bottom line, if you don't
Yeah.
have one,
take a look.
get your lawyer.
If you updated your declarations, it might already be in there, but take a look. Diana?
So what is, your basic, finishes,
Standard finishes?
So if you've got a condo complex that's 50 years old, those are the basic standard finishes
Or obsolete?
are obsolete.
So we go to what today's equivalent would be. So we wouldn't put shag carpet in there, for example. We pick up a 32-inch nylon carpet.
For these days.
If you can find it.
That's enough.
Oh, sorry. To repeat the question, she's asking if you're an older building and something that was standard 30 years ago, which isn't standard today, or you can't determine it. What's the process for us to cost it out? So at that point, there is an obsolete process. We look for what the equivalent standard would be today. So that includes how the kitchens are laid out, flooring, the ceilings, lighting fixtures, etc.
For that, for example, the sink, shower,
Yeah.
bathroom, those are very basic items.
Yeah.
They could be upgraded and they would be covered if there was a.
Absolutely.
Absolutely, yeah.
But if you have a wraparound tub shower enclosure, you're not gonna get them to do a tile shower, if that's what you have now, right? So if your standard unit was a regular
Insert.
bathtub shower thing, and now you've got, a beautiful tower shower with 3 rain heads or whatever, that's an upgrade.
Yeah.
That you're gonna have to insure under your own policy.
So the standard would be determined as, one shower head, no,
Again, it depends on.
Yeah.
The base unit says add for the bathroom.
Yeah, it would have been whatever would have been installed at the time by the developer. And so something that Omar mentioned is functional obsolescence, and that would apply to the whole building. If
Yeah.
there is a material or a system that's present in the condominium that wouldn't be used today based on current standards or current codes, we would look to use
Yeah.
whatever is the current standard of an equivalent quality of like and similar materials.
quality would be very hard to determine.
So
There is a process to do it. They essentially look at what developers are building today for an equivalent type of building. If something is built as a mid-range building, what is a developer building today as a mid-range building as standard?
And that is something that your appraisers are applying, and
Yeah.
we look at typically 4 different quality levels. There's a low, medium, good, and then an excellent quality level. And so when we're going into the units and when we're going throughout looking at all of the finishes, those are the types of things that we're looking for, and we'll apply a certain cost rating according to the finish that we see, the quality that we see. Edna was
Yes.
next, and then we'll come back over here.
I think my question was very similar. Our building was 45 years old.
Yep.
I mean, when it's built, it had some carpet and some linoleum and standard cupboards and stuff. My unit alone, I have upgraded my kitchen cover.
Sure.
But I mean, the layout and everything is still the same.
Yep.
So if we have a unit that has upgraded their bathroom to a walk-in shower and the whole 9 yards, and upgraded their kitchen, their cupboard
Sure.
to something very recent, where and how do we know that the owner has insured them of those upgrades?
Unless
Yeah.
you're collecting that information for a reason, you really don't. But this is why it comes back to having that standard unit description in your bylaws. It is something that we request at the onset of any process when we're quoting, and when we receive authorization, we want to be able to go through and review. Our information is also only as reliable as what is being shared with us. What we can see on site, we do request to see if there is one available, a standard original unit. In a lot of the cases with these really old buildings,
It's almost impossible to do.
Available. And so we're relying on the information that is being shared to us by the site contact who is touring us around. And I mean, there is a little bit of flexibility and leeway there applying this quality standard. So we just do our best, do our due diligence with trying to find out what was there and what we're going to be putting in. But this comes back to, again, this is why it's important to have it documented. In terms of the person who has all of these upgrades, if they don't have that insured under their own personal policies, ultimately it's on them. If there was a loss and it required,
They're going back, yeah,
they would get
the standard.
We're fortunate, I guess, because we have a great picture of it. So far.
There you go.
Okay, I recommend documenting as much
Yes.
as possible, having photographs so that, and it's the same if you've done any betterments and improvements, though it's not included in our reports. It's best practice that as an owner, you are documenting exactly what you have, because it'll resolve issues much more quickly in the event of a loss.
So just to add into what she said, in other provinces, they've added a standard insurable unit description. And as part of the process, what we have done at Normac is send out a betterments forms to property management firms. So if betterments are now collected and maintained by those property management firms, up and beyond the standard insurable, just so they know the liability, because some condominium corporations still include betterment, so they want to know what that value is. So that's another consideration you can take, just having a request on an annual basis, who's upgraded what, and then have that track somewhere, just so everybody's aware. Also, that helps if betterments are included in your insurance.
Okay,
Oh.
so then something I implemented just recently, we're revamping on our file. And now if there is a renovation request, I'm putting a copy of that into their.
That's really good. Yeah, that's really, yeah,
That's a good idea.
that's a very good idea.
So we have, sorry,
But on that evaluation for the entire building, if you said that out of so many, 100 units, like 75% have been updated and upgraded in the last 10 years, and that data you'll have with your request forms, would that not come into the evaluation?
No.
no.
It doesn't, yeah.
Anything that you have put into your unit above and beyond what was originally installed by the developer is on the unit owner to ensure.
So just to reiterate, it's to determine what is the corporation's responsibility and what the owner's responsibility is. We don't want to put a value that put the cost to the corporation on our reports. That falls back to the unit owners.
You have to think about it too. If you're living in a unit that might be original and your neighbor has just put in $40,000, $50,000, $100,000 into their unit, if you don't want to be responsible for paying for the insurance for that, that would be on the individual.
Yes. Yep. All right, go ahead.
In Manitoba, we're required, as you know, to do the building reserve study every 5 years.
Correct.
It's an engineering work, and it's used to, and if I'm wrong, but it's used to essentially project what the costs or repairs may be. Yours is close, but not the same. So my question is very roundabout, like, can we use your appraisal study as a?
No.
Yeah, in short, no. So the idea with a reserve fund study, this is what you're referring to, is it's a financial planning document. So you're using this to determine the lifespan of the different elements of the components of your building.
It's two different things. Yeah.
Exactly. So, you know, in 10 years, we're gonna have to replace the elevator. It's gonna cost this much. Yeah, for everybody, so that we understand the difference. And what Normac is doing is we are purely looking at what it would cost if your building, let's say fire, that's a very common one, burns down tomorrow. We wanna know what would it cost to demolish that property, rebuild it to a similar current standard, bringing it up to all of those.
Yes.
So second part of this, and it's not a fair question. What is the general range price for one of these appraisals?
Yeah,
Sure.
that's a good question.
So it depends on the building type. So that it's the size, scope, and range. So a 3-year program in Manitoba ranges on the low end for condominiums, $700 up to $2,000. So that's kind of the range you're kind of
And
in
that
for a
covers
3-year
it for
program.
3 years.
For 3 years.
Yeah. So So you pay for, essentially how we look at it is you're paying for that initial report, which is the full
Yeah.
comprehensive document in year one. You pay upon receipt of the report, and then we are providing complimentary updates to value in years 2 and 3.
So it's $2,000. Sorry, ballpark.
Ballpark. So that'd be the higher end high rises that are common. But say, like, what kind of building are you in, and give you a ballpark?
7 floors, concrete, construction 74.
So you're in between $1,000 and $1,200 bucks.
No, that's, okay, so you answered my question.
Yeah.
We don't have many in Winnipeg that would hit that $2,000.
Yeah,
Yeah.
more unique
Yeah,
operations.
those are Vancouver and Toronto and. Okay,
If you have a lot of amenities, it adds cost. If you're a high rise, it adds cost. The more blocks you have, the townhouse development adds cost. So there are factors, but yeah.
To get your appraisal, a 3-story walk-up, wood frame, built in 1985,
You're probably looking at the $700 to $800 range for the 3-year program.
for 3 years.
Yeah.
Okay.
No, it's okay.
All 3 years.
Just-
So if you think about it,
Just so you guys know, it's not an option anymore. It is in the condo act.
Yeah.
Right, we have to do it.
Yeah.
Yes.
And again, it's in the condo act to say at least every 5 years. And I mentioned at the beginning that Manitoba is the only province that has that age range. But they also say, and what we feel should trump that, is that you need to have an appraised value that is equal to current replacement
Yeah.
cost. And so if you have an appraisal that was 5 years ago, you're not meeting that current replacement cost
Correct.
in the back alley.
Just incentive, I just went through the appraisal process with Normac last fall. And for our last official appraisal for now, is a 7-year span. And property appraisal now went up to 17%. So to make sure you keep your insurance coverage adequate, I'm thinking we're gonna go with like a 3-year cycle appraisal.
Yeah. So what we've seen in Manitoba versus other provinces, because appraisals are still not done at the level they should be, in our opinion, compared to say Alberta, BC, Ontario. We're seeing larger increases here than in other provinces because people have not had appraisals completed. We've seen buildings being insured for double. They're being insured for under $100 a square foot reconstruction, which is, we're always shocked when we see that, and it's more than a handful. So we're going to get into it. We write a letter of explanation when we see a large variance between what you're currently valued at and what we're coming up with. But it's part of what Nicole's actually going to dive into a little bit. So
Where our next
transition well. But
looking-
Pete, you did have a question. Oh, okay.
I think it's important that people understand what home insurance is. Because if somebody's getting insured at 150, someone's getting insured for a physical replacement property today for less than $300 a square foot, they're in trouble. So home insurance is important.
So I can explain that a little bit more. We also have a really good resource that we have written and is available on their website.
Well, send it to
Very
Aisha and
good
send it out. Yeah.
It provides a few examples of how co-insurance can work. And so essentially, a co-insurance policy typically says that you must insure your property for, let's say, between 80 to 90% of the actual replacement cost value in order to avoid that kind of penalty. If you're not insuring to that minimum requirement, in the event of a loss, even a partial loss, let's say you've got some water damage from the 4th floor down into the 3rd, 2nd, we're not talking a total loss. But if it's determined during the claims process that you don't have for replacement cost value and you're below that 80 or 90%, you're going to be penalized on that. So not only are you now self-insuring for a certain percentage of that claim, you also will have a penalty in place. So it's a way that the insurers are able to ensure that you are insuring to full replacement cost value and to recoup some of those costs by underinsuring. Anybody want to add on to that?
Yeah. Yep.
Thank you.
Just with by the way, just on co-insurance, okay, so when a broker insures your building, your policy should all not have a co-insurance code. It should say 80%, it should say 90%. Below that, it should say stated amount code. Okay, so what stated amount code means is if you do have a partial loss, you will not be penalized in the event that you are underinsured. In order for a broker to get stated code, we need that agreement. Okay, so insurance companies will not provide stated amount co-insurance without an appraisal in that. Okay, so if you have your policy, please make sure you review it. If it doesn't say stated amount co-insurance policy, you need to contact your broker, because that means you have a co-insurance penalty on your policy. Okay, so very important factor on making sure that at least partial losses are covered up to the 100%. Okay, on your full loss, let's say you had a value of 10 million, and you hadn't, had an appraisal, let's say, I mean, they're gonna go with the COVID, I'm sure, which has brought values skyrocketing through the roof over the past 3-4 years, right? But if you are underinsured on the full loss, you still will only get what the limit is on the policy. Okay, so that's why it's important for those. But more importantly, the partial loss is what we see a lot of, right? We see a lot of partial losses. We don't see as many obviously full losses. So stated amount code is extremely important to be shown on your policy. Again, if you're unsure, call your broker, or call your property manager. In turn, your property manager can reach out to your insurance broker to ensure that. Your certificate of insurance should show that. It depends which broker you deal with and how they actually put that on the certificate. So you can also look at your certificate of insurance if they've seen it.
Thank you for.
Thank you, Deanne. That was really good.
I've got a building dollars, let's say we only insure for $80 million, we have $1 million loss. And now I'm with full insurance, is that correct? Yes.
Well, if,
And how much does it cost?
so
For being underinsured.
So if you have stated amount on your policy and you have a partial loss, they're not gonna penalize you.
Right.
If you have a co-insurance penalty, so let's say you have 90% co-insurance on the policy, it's a very simple method. It's what you have insured on your building over what you should have times the loss. So that means that will tell you what out of that $1 million you would get paid.
There are lots of calculators that you can find online to play with the numbers, and this.
The point is, it's significant.
It
Yeah,
can be.
it can be significant. It can be significant.
It's simply inflation. It's what you did have over what you should have had.
Yeah.
Times the loss.
It's significant.
Yeah.
Huge.
It can be significant, exactly. So, important to get appraisals done as indicated, but also please make sure you review your certificate and your policy, to avoid any potential, downfalls on the partial loss.
Zach, yeah.
I just have a quick question, regarding the TIV values.
Yep.
Have you guys seen the Canadian cost guide by chance?
Okay, can we come back to this? Because we have a whole section at the end that talks about construction costs, what's happening right now, what we're seeing values increases year over year increases, so it's like in this area. So maybe we'll answer your question. If not, can we come back to it?
Perfect, thank you.
Awesome. I'm gonna move along. Again, thank you both, Steph and Kathleen. That's a really great explanation, much better than what we could give on co-insurance and stated cost. So thank you for that. I'm gonna talk a little bit about what are the key considerations in how we determine TIV, total insurable value. We know what we're looking at when we're doing site inspections, but where do cost differences actually come from? So there are a number of things that any experienced or knowledgeable appraiser is going to consider. Some of these are very standard across appraisal firms and different costing sources. And then there's others that aren't generally accounted for in the same way or may not be included at all. So you want to be sure that these are things that you're looking for from an appraiser when choosing the firm that you're going to have do your valuation. So the first thing that we look at that is going to play an impact on your valuation is the geographical location. You can imagine that a property that is located in a congested rural area suburban area is going to be costed much differently than something that's in a much lighter suburban area. That's due to decreased accessibility, higher costs of permits, logistical challenges, and of course, often higher professional fees in that area as well. The size of a property can also impact the cost per square foot. So if you were to compare two buildings of very similar quality and construction, generally the smaller building is going to have a larger cost per square foot than the larger one. And a few reasons for this might be that the smaller building has all of the same systems and components that the larger building has. However, it's being shared across a smaller footprint. The other reason for this is often contractors are just not making the same amount of money as they are on the larger projects. So you're going to get some of those at premium fees. Quality of materials, simply put, a better quality of material is going to cost more than something of a lower quality. And then it's these last two sections where we really start to see some discrepancies and where you need to look, especially looking at the Manitoba Condominium Act. They speak specifically about ensuring that the demolition and debris removal is included and that you're bringing everything up to code. So I'm going to dive in a little bit more to those sections here. So the first one is the building code and municipal bylaw review. It is a critical part of any insurance appraisal. What this essentially means is that we need to account for any costs to bring a generally older building up to current code. Of course, there is typically no requirement to upgrade your building while it is still standing. But upon rebuild, we do need to make sure that all of those balconies are at a certain height, that there's fire protection, that there's handicap access. There are new building code regulations that have just come into Manitoba regarding energy. Those are going to be enforced, and you want to make sure that your appraiser is aware of what these are going to look like and how they are going to impact your reports. In some cases, particularly on some of those older buildings, the total cost to bring buildings up to current codes and meeting all of the local bylaws could be up to 30% of the total replacement cost. So you want to know that these are being accounted for and applied appropriately. The other one is debris and removal. And people often forget that during a rebuild, you have to get rid of what was previously there. And this can be both a lengthy and expensive process. It should always be included, and it's not enough to simply add a percentage factor. So what we need to look at when we're considering what the demolition cost is going to be on a certain property is, again, the location, similar to the construction. Is it going to be in a very suburban area, or are we looking in something that's a little bit easier to access in the suburbs? We're looking at materials. As you can imagine, a concrete frame property is going to take a lot more work to remove than a wood frame. And we're also looking at the age of the building. Are there prohibitive materials that are being used that are going to require special contractors and equipment to take that off site? So again, this can play a small portion, but it's definitely needs to be considered, and you want to be looking at it for each of these specific factors as opposed to here's a 5% across the board for that type of demolition. And then finally, costing sources. So we had a question, Zach, about looking at the Canadian cost guides. And so we want to talk about how do appraisals come up with their costs? What are they using? And there is a lot of information out there. We find that the best sources of costing that Normac uses is our own proprietary cost guide. This is something that we have built in our 25 years of appraising properties, working with developers and engineers to see what is happening in the industry. And by being the appraiser of choice for a lot of new builds, we always ask for the cost of construction, and we know how to apply all of those numbers. So we have developed our own costing database that all of our team is trained on in addition to the experience that they bring. And this is something that we routinely update against a variety of costing sources. And the primary costing sources that we're using to compare against are Canadian cost guides. I do caution against using, there are a number of US cost guides that are typically used for quick and easy appraisal valuations. Great sources, but they're not necessarily looking at the regional specifics of the areas where everyone served or lives. And they're also not necessarily applying the demolition and removal the building code and the bylaw costing appropriately, because they're just not getting into the minutia of Canadian markets. So what we recommend looking for when you're talking to an appraiser is what are they using for their costing guides. We look at a multitude of them across Canada. We're looking at Altus, we're looking at BDY, we're looking at Stats Canada, and they're not all created equal. Some of the cost guides only look above grade. Some of the cost guides also don't include building codes and the demolition. So you have to have an experienced and knowledgeable appraiser analyzing those numbers and being able to appropriately incorporate them into your cost.
Are you able to send out the 2024 Canadian cover?
Are you speaking about our cost guide? Yes,
Yeah.
we will be sharing this after the presentation today. So every year for the past 4 or 5 years, we have been releasing a construction cost trends ebook, which essentially talks about what we're seeing for year-over-year increases in each region across Canada, and what are some of the important factors impacting those costs. So our next section actually talks about, it's a bit of a summary of what you'll see in that ebook, and we will be sharing it afterwards. So I didn't realize we were talking about our own. That's really fantastic. Thank you. Yeah.
And I use it in conjunction with evaluators.
Yeah.
To make sure that I'm
Sure.
the same ground if we don't have papers.
Yeah, fantastic. And again, some of the cost guides, again, if you're looking at just one, there is a range. They do have
Yeah.
differences.
Based on quality, based on where it is.
So, okay, without having physical appraisal.
Exactly. Perfect. Yes, we will be sharing it. Thank you for promoting that on our behalf. So before I hand off to Omar for the last section of our presentation, I just want to talk about differences in appraised values, because there is a benefit of having consistency with an appraisal firm, because we all do our costing a little bit differently. So when we bring on a new appraisal program with a condominium corporation, one thing that we always ask for is the current insured value for the previous year. And sometimes people think, oh, you know, I don't want you to use this value in your calculation. And we don't. We do an independent analysis of the property, but we use that insured value amount to determine how we're going to respond to the condominium if there's going to be any significant change. We occasionally see, it's not as often, but we do occasionally see our appraised values going down. That might be a corporation who was being overly diligent in increasing their values each year to a point where they are now over-insuring the property. We're going to want to provide a letter of explanation that substantiates our research and why we feel that the appraised value we have delivered is reliable and accurate. And then, of course, if there's going to be a significant jump to value, this is more often what we see and follows the example that Alan shared. If you haven't had an appraisal valuation done annually, you are going to see some of these large jumps, especially in the last 3 and 4 years, as Kathleen has mentioned. Construction costs have skyrocketed as a result of the COVID pandemic and the fallout of the housing market beyond that, being huge demand, decline in labor, fluctuations to material prices. We'll get into that more heavily. But if we see that there's a huge jump, we use that current insured value to red flag that we need to go back. We're going to double check our numbers. We're going to do an additional peer review in our team to make sure that the valuation that we are delivering to you, we feel confident about, and then we will provide you with that letter of explanation to help you understand how it is that we came to that conclusion and why we feel that you should insure to value. Pete.
Maybe jumping the gun, but I like your idea of the portrait qualities of finish. What about those property management companies that actually actively try to reduce risk? So they're making a contribution to reducing the cost of the relative losses in the insurance industry. I see no response from the insurance industry to recognize that. Am I wrong?
Well, that would be a really great question for another seminar.
All right.
How the property and the board is addressing any risks in their property wouldn't impact the replacement cost.
Should we react in the lower insurance rates?
Yeah.
As a consequence.
And your broker would be a great first place to start with that. Okay, I'm going to hand back over to Omar. We're doing a little bit of a zigzag here, keeping things, voice fluctuations interesting.
Perfect. Thank you, Nicole. From there, I'll get into the trend of the construction industry and how that's impacting your total insurable values. There's two main areas that are really impacting the costs. One we've mentioned several times, it's the materials. But before that, we're going to get into the other one, which is actually the cost of labor. So before that, we're going to just touch on the evaluations we're seeing in 2024. As a country, we've had a few rough years in condos. For the first, we've had a hard insurance market, which these two could probably attest to. Skyrocketing construction costs caused by high demand, shortage of labor, supply chain constraints following the pandemic. Throughout 2023 and into 2024, we're finally seeing some reprieve from the high inflation numbers and heading back to some normality in terms of year-over-year inflation increases. While we expect costs to trend downwards in 2024 based on relative numbers, we're expecting to see between a 1% and 7% increase across Manitoba, and that just depends on where you are, what type of building, when it was built, the quality. Having said that, like I mentioned, the two most critical components of calculating construction costs are labor and the cost and availability of materials. They're still fluctuating. We're looking at them on a regular basis, and we're going to dive into some of the details on them.
That's what, 7%
Over last year.
Appraisal. So just to reiterate,
Yeah.
right? So I
Yes.
want everybody to think, oh my God, it's gone up 15%, but if you haven't had an appraisal in 5 years, totally different story.
Yeah.
I think Alan used the example, they hadn't had one in 7 years and it was a 17% increase.
And that's why the letter of explanation is so important. We send that out and highlight some of the key differences and what's driving the increase. During COVID, we're actually sending letter of explanations with our own year-over-year increases because the increases were so dramatic over those 2 years. So just to touch on the labor side of construction costs, Manitoba actually boasts the lowest unemployment rate in the country. It's sitting at 4.2%. For comparison, the national average is 5.7%. And neighboring provinces, where I'm from in Alberta, it's 6.2%, as is Ontario. Saskatchewan's just over 5%. Focusing on the construction industry directly, there's actually a record number of construction workers in Manitoba right now. It's at 56,000. Per capita, this is still on the lower end of the country. So per capita, Alberta, Saskatchewan, BC, Ontario, and Quebec all have more. The only provinces which have a lower per capita construction industry as a percentage of the total labor are the Atlantic provinces. StatsCan's also put out a survey and it highlighted 70% of construction firms are looking to hire in Manitoba within 2024. And the majority are still finding it difficult to find skilled labor. So there is reason for optimism in the construction industry in terms of the labor pool, but this is going to put on an increased pressure on construction costs over the next few years as we see materials be flattened out. The reason for this, there's multiple reasons. One, there's high demand for new housing from a high immigration rate. Which is translating to a high demand for housing. There's also a lot of new government initiatives. I think most people in this room would kind of see what the government's trying to spend in terms of density, accessibility, and new projects across Winnipeg. And of course, a lot of new federal incentives and incentives for multiple family housing. Manitoba still, even with a record number of 56,000 construction workers, still has a shortage of construction industry for what they expect over the next 10 years. And this is having an immediate impact in terms of construction costs for labor. So we're actually seeing pretty high increases in labor costs. You can see up here the average wage for construction costs for construction industry worker, a journeyman, is between 5% and 10%. That's mid-22 to mid-2023, just as a comparison. And for some of these roles, a carpenter wage increase was 8% year over year. Floor covering installers, 9% year over year. Gas fitters, 6% year over year. Plumbers, 5% year over year. Sprinkler installers at 10% year over year. And general construction at 5.5%. So above what the core inflation numbers are. And we have to take a look at these numbers and take them into account when we're actually calculating our internal cost guides and how we apply those cost guides to everyone's buildings. The other major factor, and it's the one most people see on a daily basis, is the construction costs for materials, which have continued to steadily decline over 2023, except for a few areas. We've seen a divergence of lumber costs to energy prices and prices for concrete over 2023. The declining lumber and energy prices support evidence that costs have been on a downward trend due to decline in demand in these areas and the supply chains filling back up. This has been a positive impact of reconstruction costs and has been reflected in our appraisals. In 2022, our numbers might have been 7 to 12% year-over-year increases. As you've seen, we're now back to the 1 to 7%. A lot of this is attributed to the declining raw material numbers. Having said that, it's important to note when determining total insurable value, a single material price only makes up a fraction of the total cost of materials. So if you see a large decrease in wood, you might be thinking I'm in a wood frame building. Wood still may only be 25 to 30% of the total cost of construction, depending on build out floors and other factors. So just keep that in mind. But if you go through the slide, you can see the impact of the last 12 months. You see many of the numbers coming down dramatically, lumber being the strongest input cost, going down 7%. But on the other hand, if you're in a concrete frame building or you have a concrete parquet, that's gone up 11%. But what I really want to highlight is the furthest right slide. That is February 2020 to the end of 2023, essentially the COVID increases. These are very large increases we haven't seen as dramatic essentially ever. So concrete is sitting just under 30% higher than it was pre-COVID. Lumber is still between 16 and 24%, depending on the type. Even with the large decreases last year, crude energy prices have also gone up dramatically, which has a big impact on even the machines on site, bringing materials to site, and people are putting in extra fees to transport goods. So it's something that we have to look at on a regular basis. And as we've mentioned to Zach and others, we do have a construction outlook that we send out on an annual basis that highlights the high level trends of what is going on and what is driving some of these numbers. It's a national ebook. We do specify certain regions and certain provinces. So if you do receive it and have questions, please let us know. Your team in Alberta actually does get it, and they always have 100 questions after it's sent out to us. So we'll get it out to you as well. So feel free to let us know. But again, high interest rates and the post-COVID supply chains restoring have really helped the material market, but with the high demand of housing and immigration, it's impacting the labor market now, which has still an impact of keeping numbers high. And depending on how many skilled labor positions get filled, people go into the trades, the wages may continue to increase as we've seen over the last couple of years. And that was our conclude. I want to thank everybody for coming and asking so many questions and participating. We hope it was valuable, but yeah, if there are more questions, please let us know. We're happy to review. Edna.
You didn't touch on underground parking anywhere, and that's something that I'm working on right now.
Sure.
Our parking is not under our building. We have a 2-layer parking lot, one which is underground, the other okay. Now, we have been requesting, like we get the residents to tell us their license numbers and stuff like that, so we know what vehicle is supposed to be down there. If they change their vehicle and we don't know, does that impact their insurance? And if something happens down there, can they figure out what the vehicle actually is that insurance company would be replacing?
Should we ask?
Yeah.
So the vehicles would not be included whatsoever.
Not included in our building insurance?
Absolutely not.
No,
No.
not at all.
Yes, but the parking structure would.
The parking structure would be correct.
And if required to add additional parking spaces, that would be something under the building code or the
Yeah.
municipal bylaw that we would include. But anything in the spot on the property would not be included.
Correct.
So exclusions from the appraisal, there is no personal property included in the appraisal. There is no betterments and improvements included in the appraisal. It is strictly what is owned by the condo corporation, and including potentially common furniture. So I know, Omar, you touched a little bit on amenity spaces. If you have a party room, the furniture in there would be included because that belongs to the condo corporation. If you have a pool or a hot tub, those things would be included. As long as it is common property or limited common property, that would be included in the appraisal. Anything belonging to any of the unit owners would be excluded from the appraisal. Here, there, and there. So
The
you're
only thing not addressed so far is land.
Land is excluded from the appraisal. All right.
landscaping.
Landscaping is
is
included,
included.
but the actual cost of the land is excluded, and it's cost to reconstruct the property.
So market value plays no impact on our appraisal valuation whatsoever, and in fact, it's a completely different costing methodology that we are not using. If you are relying on your market value appraisal for your replacement cost, I would get that checked immediately.
Yes.
You're likely severely, well, maybe not, severely overinsuring. I'm in Vancouver, and if you're doing, you are severely overinsuring your property. It might be the opposite here, but that is not the appraisal that you want to be using for your replacement.
No, we've had questions from boards going, I can go buy a new unit from your developer at a very different cost. And we have to walk them through the details. It's an apples and oranges comparison.
Yeah.
We don't take into account land. It's a full exclusion. We don't take into account depreciation as well. Those don't matter. It is what is it cost to reconstruct the property today at today's standards. So that is what we're looking at, and that's what we're providing to you, your PMs, and the insurance world.
All right.
My question is, I guess, related to electric vehicles. Like I heard, if they burn 10 times hotter or do more damage. And so if in a parkade, if an electric vehicle causes a fire, and is like Autopack, I guess they pay some money towards it, but would the homeowner under his policy have to cover the extra damage that the vehicle does, or who would cover that damage?
Condo corp.
The condo corporation would pay for it.
You have to remember, the condo corp is responsible for everything of a standard.
Okay, but they have a deductible of whatever, right?
Correct.
So, but that deductible, would that not come under the homeowner's policy?
Well, I mean, it would really depend, right? Because the unit owner has to be found accountable, right?
Yes.
An act or omission, right? That's for the condo act, right? So if there's, they have to be found responsible. So I don't, like, if you have plugs, right? If you have the electrical outlet chargers.
No, it's not being charged there. I'm just saying if there's something goes wrong with the car.
Unless it's in a deck or bylaw saying you can't have any electric vehicles in the parkade, let's say, I can't see how they would be found negligent.
Yeah.
Right, so Autopack obviously covers the vehicle if they're insured, and the corporation would recover, would cover the damage to the building.
Yeah. Like
It's the recovery of the deductible that a unit owner would have to be.
Like there's a firefighter living in our building, and he says if the electric vehicle ever burns, he says the fire is so much more severe.
Oh, I'm sure.
Yeah.
Yeah.
Sorry, just had a statement.
Any other questions? Yes.
So we're just kind of like one thing we've done a lot in the past year for our building is we upgraded a lot of the amenities. So our HVAC, our boiler systems, we're looking at doing EV ports, making it more of a modern building.
Yeah.
With more efficiency and everything. But we find, insurance costs, everything's going up. Property values aren't going up or even depreciating for some values. So like it's kind of like everything's costing more and we're getting less out of our place for it. So like with the upgrades of all these common amenities, it's going to cost more, save us in energy, but not really save us in values or insurance.
It wouldn't have any impact on the replacement costs, unfortunately. So one of the things that we look at the end of each 3-year term, we do recommend that you renew on a new 3-year, so you can continue with those updated valuations annually. We ask at that time, has the corporation made any changes to the property or upgrades to materials? Have they undertaken any major projects? And sometimes those have zero impact on the replacement cost, because what we're looking for is a change to material. If you've done a complete exterior project, but you've replaced the siding of your building with the same material that was there previously, it would not impact the replacement cost. So if you're replacing some of those systems that are at the end of their lifespan, for the replacement cost, there is likely no change unless you have upgraded the material.
So you go from a double pane window to a triple pane window, now you have an increased cost, and that has to be now taken into account the appraisal, but like you mentioned, to now increase the value of a replacement cost, they have to now cost a little bit extra to get that insured. So there is a trade-off, which is what you're speaking
It
of.
sounds like you're more so talking about the insurance side of things. And
Yeah.
where you
Yeah.
Get the rate down. with
Yeah.
the rate.
Yeah.
So
And to
that's
answer
more-
your question and Pete's, you won't necessarily see a reduction in your rate when you do your roof, or when you replace your mechanical, or when you upgrade your plumbing lines to grades. But what you will see is if you don't do it, you'll see your rates go up.
Exactly. Exactly.
So,
Then you're mitigating
right,
costs.
they expect you to have a certain, risk management program in place. That's why you get your reserve funds, right? It's telling you what you need to do.
Yeah.
If you don't do it, you will see penalties on the insurance
Yeah,
side.
that's-
You won't necessarily see a direct, it's not like your home insurance, right? Your home insurance, if you don't smoke and you don't have a mortgage, you're automatically getting whatever it is, 20%. It doesn't work like that on commercial insurance for condos.
Over here.
I've got one other question. With regards to high-rise, like there was a fire in England a couple of years, they had vinyl siding on the outside. And in Dubai, there was another high-rise that caught fire. What is happening with that rate? Is there any code or restrictions happening with regards to vinyl siding on high-rises?
I don't know the specifics about vinyl personally. I do know that those types of catastrophic losses are exactly why building codes get updated. So when we see losses like that, internationally, locally, we are looking at codes and they are being revised to reflect what should be to help prevent that. How that impacts insurance, I can't comment if that is playing a role.
One of those instances with those sandwich panels, you're not allowed, there's insurance companies that won't even write insurance on buildings that have that. It basically acted like a chimney between
Yes.
the building and the outside.
Yeah.
Yeah.
There you go.
So there are companies, it's some sort of a sandwich panel, like I don't think you can use them in, I don't know, anywhere in Canada you can use them.
Yeah, certain insurance companies won't write risks for certain reasons,
Yeah.
right? They don't, like, not every insurance company is gonna write your building necessarily,
Yeah.
right? So,
Yeah,
but yeah,
you see vinyl siding on townhouses like that, but on
Yeah.
other
I don't
stuff.
see it on anything above 4 floors anymore.
On new construction.
On new construction. We had a 12-story building, I think it was 444 Kennedy, that went right up the side on vinyl with some of the sandwich material behind it. They stopped it.
Yeah, they stopped using that stuff.
and that's what would be part of code, right?
Yeah.
As they're talking about when they're doing appraisals and bylaws and codes.
So Manitoba has now gone to the National Building Code as of January 1st. So it's category 1 to the lowest level, but it's now applied to the federal standard. So I don't know where this item is specifically on the list, but everything now is under a federal standard, which is a higher level than that the province had previously. Anything else?
That was good.
Well, you came with a lot of really great
Yeah.
questions, testing us. Thank you so much, everybody, for coming. We really appreciate your time being here.
Yes, absolutely.
Our contact information is here. You have our business cards. If you have other questions, please don't hesitate to reach out. And as we mentioned, we'll be sending out a few resources that you'll be able to take back to your boards and to share that information. So thank you again, and I hope you all enjoy the rest of your afternoon.